Wholesalers, it's Rob Shore at Wholesaler Masterminds, and you may be thinking to yourself, Rob, you're thinking, what do you have besides this amazing podcast? And I'm so glad you asked. Wholesaler Masterminds has an assortment of product and services all designed around the art, science, and lifestyle of wholesaling. As an example, we have coaching services designed to help you power wash your practice, whether you have 2 years or 22 years. We'll offer you speaking live engagements at divisional or national sales meetings. Our scheduling service has dedicated professionals trained in the art of getting you more appointments, Wholesaler Mastermind schedulers. Our Speakers Bureau brings you amazing speakers and processes to get better return on investment out of those speakers. And finally, our partnership, our newest partnership with Allego. If you have Allego and want to get the Wholesaler Masterminds channel on your Allego platform, please let us know. Wholesaler Masterminds, happy to bring you this podcast and so much more. Wholesaler Masterminds, the art, science, and lifestyle of wholesaling. Wholesalers, I don't know if you saw a post at Wholesaler Masterminds recently. The title of the post was 70% of RIAs not influenced by wholesalers, plus 46.7% react negatively to interactions. That, of course, will make your skin crawl. That was directly from AP Viewpoint. So AP Viewpoint did a focus group of 30 financial advisors across the country, generally over $250 million in assets, et cetera. That was intriguing to me. And based upon the 360 times it was shared on LinkedIn, it was interesting to a lot of other folks too. So I thought we would dig a little deeper. And that's exactly what we're going to do with our guest today. Welcome to the only podcast on the planet dedicated to exploring the art, science, and lifestyle of wholesalers and their leaders. This is the new Wholesaler Masterminds radio show. I'm your host, the founder of Wholesaler Masterminds, Rob Shore. Wholesalers, welcome back to the new Wholesaler Masterminds radio show. GDC Research and the president of GDC Research, Dennis Gallant. That's who our guest is today. Dennis is an industry expert. He's got over 25 years of diverse experience in market research, competitive analysis, tactical and strategic planning, business development, and market validation. He works with asset managers, insurance firms, broker-dealers, banks, clearing firms, and custodians. Now, prior to GDC, Dennis was a director at Cerulli. He was a vice president of marketing for Funds Distributors, Inc., and he held positions in mutual fund marketing and operations for the Boston Company. We're going to pick through the study that he did, the title of which was RIA Wholesaling Best Practices, a Qualitative Approach to Effective Distribution. Dennis, welcome to the new Wholesaler Masterminds radio show.
Thank you, Rob. Thanks for having me on.
It is a pleasure to have you here, and we're going to pick your brain clean for 20 to 30 minutes. We need to know more about this. This is an amazing opportunity because the tide of advisors moving to the RIA space is ever increasing, from a small drip to a steady flow over the course of the last 5 to 7 years. And yet we've got some real challenges as a community on how we're going to get better at this. And in the report that you published, which is voluminous, and you sent me just a small portion of it, there's a top wholesaling practices grid. And wholesalers, what we want to do today is take you through an audio tour of some of these best practices and get Dennis's ideas about what RIAs were saying and where the areas of improvement can be. And it really starts out with kind of the recognition, Dennis, that what worked for retail broker-dealers not going to work in RIA. It takes a different approach. How does that work? Why is that?
Well, it's been very interesting, Rob. I've been covering this market for a very long time, and I do lots of different studies on a wide range of wealth management topics. And I can tell you that when I look across channels and I look at the data, all advisors seem to be in lockstep with certain trend data, except for the RIAs. So they've always been the outlier of the marketplace. And part of the reason is that they're just a diverse group. when you talk about the RIA marketplace, you're talking anyone from a family office to, a small solo practitioner. They could be planning oriented, they could be timers, they could be a whole sort. So it's a very varied market, and so it's very hard for a lot of firms to get their arms around. The numbers and sizing of this market be very attractive, but when you start segmenting it out and looking at this fragmented marketplace, it can be fairly daunting.
And one of the things it appears that you have validated, some of us knew this, kind of intuitively, but you've validated it still further, is that taking the retail wholesaling approach and slapping it against RIAs is just a setup for problems.
Right. And it's not to say that there aren't quality wholesalers out there that come over from the independent broker-dealer marketplace, and there have been some that have made that successful transition. But I think in many cases, there's a lot of, what we've learned in the independent broker-dealer market, what have you, is very applicable here, and it's not. There are certain things that are very distinct regarding this marketplace, and that I think one of the shortcomings that we've seen is that firms haven't really taken the training in the infrastructure and the expectations that go with this marketplace and sort of set it up as distinct. They're still following and saying, it's going to behave much like the previous markets we've done, and it's not.
Let's talk about dissecting that a little bit, because I know one of the things that you acknowledge and further dive into in the report is the whole notion of the sales cycle. And leaders are used to a certain runway when it comes to the sales cycle of a retail advisor. And what you're reinforcing here is that the sales cycle in RIA is quite different. And I'd like you to embellish that, because there's actually some numbers you place to it that might be startling to some that are listening.
Right. Well, when we approach the study, we approach it from two different ways. We did this qualitative approach where we said, let's go out and talk to wholesalers. Let's talk to key accounts. Let's talk to the custodians. Let's talk to the internal. So we looked at, a wide range of folks in the marketplace on the sales side and sales management, and we also then went to the advisor marketplace. And one of the things that we recognize, and it's always been a problem, is that there really hasn't been, from the marketplace, there really is not a tolerance for the sales cycle in the RIA marketplace. There are firms out there that certainly understand it and I think do a fairly good job, but, you're talking about a sales cycle that isn't within a 12-month period. It can take anywhere up to, in some cases, 14, 15 months to start really building out a pipeline. And we've seen many wholesalers telling us it's taking them 3 years. It's taken them, in many cases, 6 years to actually land, an asset flow. You don't have a lot of liquidity events, especially given where the market is right now among RIAs. And so when you have, especially maybe senior management coming in and saying, RIA is a growing marketplace, we'd love to expand our effort into this area. We've gotten some hits because we've had some pretty good performance, and so they sort of look at this market and say, we've done fairly well, and we've put very little in terms of resources and sales staff behind it. So if we double that sales staff, we'll expect higher sales and higher volume. And of course, they're applying that same approach that they do in the traditional marketplace as they do in the RIA marketplace. In many cases, the same with that sales cycle. So 6 months in, they're having their sales meeting. They're talking about, what's in the pipeline and how are things going and how are we closing things. And, it's a slow process. And so there's not a lot of sales hitting, because now you're moving from maybe being sort of this reactive approach where you have sort of a very small sales force to a larger sales force. You're expecting to really push sales. And it's very difficult to push sales in this marketplace. It takes a while to build trust, to build rapport with advisors. And it seems to be this traditional 1 year time frame where management comes down and meets with the group and saying, we're not hitting our sales goals. And in many cases those sales goals are probably unrealistic. And the time frame, again, unrealistic. 12 months is too short. We talked to a very solid sales manager who was saying, we learned after quite a few years in this business that, when we bring on a new wholesaler, we tell them it's going to take 2 years to kind of get the business up and running, especially if they're coming from the independent broker-dealer market or they don't have a pure RIA background to really build that exposure.
And that really speaks to the need of senior management to formulate their strategy and formulate their investment philosophy in this channel in the right manner, right? Because if they're laser focused on shorter term outcomes and they're making investments with an eye towards shorter term outcomes, then this does not end well.
No, and in fact, we've seen lots of firms over the years, and I've been covering RIAs since the early 90s. So I actually started off RIA marketing funds to RIAs, and I kind of understood it, way back then. But this is a market where you see firms have fits and starts. They go out to the market, it's growing, it's expanding. They go out with a sales force. 12 months go by, they haven't hit their sales goals. Guess what? The funding gets pulled back and the sales force gets pulled back. And then 4 years later, they're back out in the marketplace with it again. And, when we interviewed RIAs, they'll tell you that, I've seen too many times, the wholesaler showing up in the door, talking about these solutions. And they say, we're very cautious with someone new to the marketplace. We know that we've seen it in the past where they think, they're going to, we're concerned that where are you going to be in 2 years? If I'm investing in your product, I don't want to find out that, I'm going to be talking to a low-key sales desk where I end up calling in to the independent sales rep now that the RIA group has been shut down after a year. And so there's a lot of hesitation in this. And I think it is important for the sales management to be involved in this process. And, we heard it from the actual wholesalers themselves. They said, it's a marketplace, especially as we've moved towards advisory business, and certainly fed by the DOL, that a lot of folks in the marketplace think, oh, I understand the marketplace. It's much like managed accounts, and it's much like where we've all been going, and it's very consultative. And the wholesalers are saying, but management thinks they get it, but they don't. And so I think a lot of firms think that they're doing all the right things, and they are following the best practices. And I would ask them or question that and say, go back and really test out whether you're truly doing all the right things.
So it's not a channel for opportunists. It's a channel for folks that have a solid strategy and want to invest both in dollars and in infrastructure and human capital to make a mark, right? Because it doesn't mean you have to be the size of a BlackRock, right? You can be a smaller firm, but you have to be committed to the long haul.
Yes, it's having the right expectations and understanding that sales cycle, and it's quality over quantity. You don't need a large sales force. I mean, there are firms that have large sales forces, but if you look by and large, there's a lot of good providers out there that have 4 or 5 different wholesalers. Wholesalers get a bad rap in many cases, and you see the study after study saying how advisors have trouble dealing with wholesalers. And the problem is that an advisor really likes, and RIAs we spoke to said they really like wholesalers as long as they're knowledgeable and they can add value in that conversation. And that's the big message, right? It's the quality of that deliverable. And that's what makes a good wholesaler.
You gave us a great place to pivot, because the next thing I want to talk about is investment expertise. And I want to read one of the quotes, one of the wholesaler quotes. It says, "We know everything about competing managers, all the skeletons, biases, issues, and it's the biggest resource in delivering value with RIAs." And this, I think, is important because, we profess as wholesalers that we know the competition. But what you're suggesting here is for success in this space and to meet the demands that the RIA is putting upon us to be successful, we need to amp that up. Is that a fair statement?
Yes. To be realistic, RIAs get it. They don't expect, they want the wholesaler to be conversant. They don't necessarily need to be fluent with all aspects of investment management, right? Certainly, we've seen a greater expertise ended in the marketplace. You're seeing more CFAs, even going beyond the SEMA. You're seeing institutional groups come into play. But it really becomes the concert of those investment expertise that the wholesaler can bring to bear when it's necessary. So it's not just saying having the wholesaler to understand it. They have to understand it enough, but the RIA knows that, hey, at some point they may be needing to call in a product analyst or the investment analyst or even the portfolio manager. And it's critical that those resources are available so that when the advisor, who considers themselves institutional managers, they consider themselves a manager, they like to talk shop, they like to converse with what they consider a peer, another portfolio manager. And so it's important to have those resources available to the advisor. And the firms that do a great job are the ones that not only have great insights on their own portfolios, but they have resources that understand what other solutions they may be up against, whether they're 40 Act funds or SMAs or alternative solutions or even individual securities. And advisors love to talk about and hear about what other advisors are doing with regard to building portfolios.
Yeah, I was thinking about that last thing you said, and it got in the way of another thought. And the reason I say that, Dennis, is one of the things I've talked to my clients about, my wholesaler RIA wholesaler coaching clients, is this notion about what do they share amongst their clients that others are doing successfully, both in terms of investment protocol and practice management. And I just want to ask about that practice management piece. It's not necessarily on the agenda here, but it rang for me as a question to ask you, as somebody that's immersed themselves in RIAs and immersed in this study. Are RIAs seeing value, assuming that we're bringing other value? We know our product, we know our competitor's product, we can marshal the right resources of the firm to bring to the RIA, et cetera, et cetera. Do they find value in good informed conversation about, say, marketing and practice management skills that the RIA can bring to enhance their practices?
Interesting from a person who actually has clients that I write practice management solutions for in different programs, from multi-generational planning to moving to fees. I can tell you that practice management is very low on the list for RIAs. They value that investment expertise over practice management. And the reason being is that for many of them, they can get that through their RIA custodian. And that was one of the surprising pieces. I always thought practice management would be a little higher on the list, talking about marketing, expanding their business, succession planning, whatever it may be. And what you find is they're saying, well, I can get that at a lot of other sources. So when I'm actually getting in front of XYZ manager, I want to talk about money management. And so it really gets to the core of the capabilities of the manager rather than practice management. Not to say that there isn't an occasional piece, and if you get something very, very differentiated, and I mean very differentiated or unique, that's great. But you have to remember that the custodians, the Schwabs, the Fidelities, the Pershings, the TD Ameritrades, they provide a wealth of information to the marketplace. And so I think especially if a small manager, that's not where you want to spend your money in the RIA marketplace. You want to spend it on the investment expertise, especially since, and I led this point, that many, and especially the larger RIAs, have really become much more formalized in their investment management process. And so it's very important that, as they become much like a small investment management shop, you treat them that way. And again, they see themselves as very institutional-like.
I thank you for that. I want to read one portion here because it's another kind of statistic that leaps out. Well, over 60% of RIAs surveyed agree that asset managers and product providers understand how they might use their investment/products in specific circumstances. There's substantial room for improvement. Said another way, 40% don't think that asset managers understand how they might use their investment and products in specific circumstances. Can you comment on that?
Yeah, you've seen data like this supported through other surveys and other research firms out there, but what you're saying is that, by and large, 60% of advisors saying, hey, the wholesalers do a pretty good job, but 40% think there's room for improvement. So one of the telltale here is that this tells me that while the industry, even though they've been doing this maybe 10, 15, even 20 years in the marketplace, as an industry looking at this channel, I can tell you that there's lots of room for improvement, right? But I think it also underscores that part of the approach here is understanding what the RIA is. And so while I think maybe in the traditional advisor marketplace, and again, it is changing there as well, you can certainly, go and quickly find out about their practice or their certain behaviors because of how the broker-dealer is run, or the perspectives of that particular branch. It's really important to really dive deep into what the RIA is doing. And we think many, wholesalers aren't really following through with the proper questions. Firms have sort of these static information gathering capabilities. They've got their databases they collect, the size of the market. They've got, they feed in from other data sources, and they're looking to use their CRM and create big data. But we found that there's a lot of lacking at the field level of really taking the conversation and probing just further and further regarding what the advisor is doing or the RIA is doing and what they're doing and how they're managing their practice. And we think that, not only are firms not doing a great job, I shouldn't say not doing a great job, but where there's room for improvement in doing that, we also think that they're not tracking it as well with the CRM. So yeah, I think there's lots of room for improvement, and it's really right at the conversation level. And really, if you're going to start building a more Socratic process, and again, it means also having wholesalers that can talk, at least be conversant with the investment management piece. It's really hard for them to get to know the advisor if they don't know enough about investment management.
Yeah.
And so that's going to require training. They're not born with these skills, and they're not the same skills they're used in the retail marketplace. They're much different, and so firms really need to spend more time and effort training their wholesalers, their inside people, and the key accounts to really have those in-depth conversations and start looking at how are they collecting insight and information, and more importantly, what are they doing with it once they do have it.
Let's talk about how we get access, because one of the things that you touch upon is this collaborative efforts piece. And access here can be a much more laborious process, right? I mean, I don't get to walk into a branch of fill in your favorite wirehouse and automatically be exposed to 20, 50, 120 advisors. How do I go about here? What were some of the keys to success? Collaborative is a hint to this, of course, wholesalers, but how do I go about getting access? What's going to help me? What's going to help me do that?
Well, there is no single silver bullet here, but I can tell you that if you got a wholesalers in the room in the RIA marketplace and ask them what the biggest challenge is, it's access. And so, you hear a lot about, well, they don't want to talk on the phone, they want all these digital capabilities. But you see them, and by the way, it's increasing. All the advisors told us, RIAs told us that they're already seeing more and more emails come through, and they're getting more and more invites to webinars. So how do you differentiate yourself? And especially with a group where you don't have a centralized access. So certainly, one of the areas collaborative really ties in, first and foremost, is the custodians. The custodians, and you can go to the national conferences, and that makes sense. But what we found with the advisors, they're saying really at the regional level, this collaborative effort, working with custodians, setting up maybe a small round table with some managers to talk about particular investment or market trends. It might be actually working with another asset manager that maybe is not a direct competitor and actually hosting a dinner or a ball game. It's working, again, like Pershing may have a regional event, and you can work with a smaller group of advisors. But what we found, and I thought it was really surprising, is the amount of collaboration that we saw asset managers doing with other asset managers.
Right.
In many cases, even getting introductions. I think there's a recognition that this is a hard market to get into. And certainly, I think it's in everyone's best interest not to have people flogging the marketplace and with emails and unnecessary information. So you have other advisors saying, well, look, we're willing, or other asset managers saying, well, we'll work with you. Or a wholesaler would say, look, I can make an introduction for you here, and I know down the road you may make an introduction there for me. Because when you talk to RIAs, in many cases, there are some that say, hey, I do respond to emails now and then, but more often than not, they're saying, I just get too many. I just delete. And while they do value some of the digital webinars and certain content, then sometimes it's not always the right alignment for their interest, or they just don't have time.
Right.
So I think this collaborative thing is really something I think that firms need to do a little bit better job. It's not just showing up at a national conference or having a speaker at that level. You really want to get at that regional level, and that means really working with other asset managers and really getting to know the regional management or regional reps that are at the custodians.
But
they're going to be the access point. Sorry.
I want to interject a thought on that, and the thought is about how that regional person, how we're going to make an impact on them. Because what I hear and what wholesalers are grappling with is, Dennis is a regional fill in your title for your favorite custodian. And they're getting the crap pounded out of them by 15, 20, 30 different wholesalers, because all those wholesalers want the same favor, if you will. They want the ball game, they want the dinner, they want the roundtable discussion. So there's some nuance of conversation here, some nuance of how we do that. When the rubber meets the road, it is a great idea, no doubt. But then there's, okay, well, if 15 people are all thinking it's a great idea, you got to be, creative and cunning and insightful, and you got to bring all your skills to bear to make sure that you're the wholesaler that regional representative wants to snuggle up closer to. I mean, that's important.
Well, for one, when it comes to the custodians, it's going to be supporting them across the board. And that's not always affordable for every firm that's out there. Yeah. And I agree with you. This is, RIA wholesaling isn't going to get easier. It's going to get more difficult. There's just more and more firms this is the growing channel in the advisor intermediary marketplace. So as more folks get in it from various, and we don't even add the fintech component of it, it's just getting to be a more crowded space. So what do you do to stand out? I think one of the things that we're seeing is, firms are going towards working with other asset managers and setting up their own and sort of bypassing the custodian. Not that you can do that completely, but they're not just relying purely on the custodian. But it is making available maybe some senior folks. So, the problem with the RIA marketplace years ago is that, it was the smaller piece of distribution channel for a fund company or an asset management shop or even an annuity company. And so, they always couldn't get the best speakers to show up. But, so it means bringing in the quality of your speakers. It also means, again, it goes back to what is it that you're collecting and understanding from what your RIAs that you're targeting are facing. So, again, looking at your segmentation, looking at collecting information, understanding the RIA will give you a better idea of what's the right content to put together, because everyone's going to come out with similar pieces and similar things. So I'm not making excuses. It's going to get much harder. And I think, one of the areas that I think might help, and again, there's no magic there's no magic wand I can provide or magic word that's going to alleviate this issue. But we did find in this marketplace as well is that key accounts was sort of under-resourced. And it's an area where a lot of firms had the key accounts people representing 3 or 4 or 5 different other channels. And so if you are going to build those rapport and you are going to go deep and you really want to stand out and start building that rapport with the custodians, and by the way, the custodians are going to feel the same way as RIAs. They want to make sure you're committed to the marketplace as well. Mm-hmm. So they're going to want to see you sponsor other events, but they're also going to make sure that you have some longevity in the marketplace. So don't expect all the doors to open up that first year. They're going to want to make sure that you're doing it here. But if you have someone in key accounts that's really focused on this marketplace, that understands who to work with and how to work with and that networking, because you can't rely on the wholesalers to do it in their little regional areas they have. It's just going to be too taxing on them. So I think it's also important that firms need to look at, and I have no problem with key accounts working on multiple channels, it's just that firms have to make sure that the RIA marketplace is getting the proper time and attention to be effective.
Let's talk about one more piece before we have to wrap up for today, and it's super important, and it's this whole notion of responsiveness. And it's kind of interesting because we'd like to think that we're being responsive, or we'd like to think that we're operating with a sense of urgency, because both of those were addressed in this particular section. Can you speak to both of those, please?
If you had to take away anything from this study, it's what's going to make the difference between you and the wholesaler next to you. It's responsiveness. Easier said than done, but in this world of information overload, where every digital channel now, every firm is lining up and pushing content out to the marketplace. When you do get that opportunity and you have an RIA attend a webinar and there's strong interest and there's a follow-up call from an internal and the internal wants to talk to a portfolio manager and there's some discussion they want to know about a particular issue with the portfolio or something with regard to whatever it may be, it's important to, that the clock starts ticking from the minute that phone is hung up. The clock is ticking. Because every day that goes by, in fact, in some cases every hour goes by, but every day that goes by is the advisors on to the next thing and the next thing coming through to them. And so, it's not easy, especially in this compliant, over-regulated marketplace where you can all of a sudden, say, great, I'll get back to you, and now I got to run it through legal, and they're going to sit on it for 2 weeks. But I'll use one anecdote. I was talking to one RIA, and it was lunch, and he was opening his mail. And he opens up this package. He goes, I just got something from this wholesaler he sent me. He goes, I don't even remember what we even talked about. So And so you can just tell in this it's like the Twitter feed or looking at your texting stream. Once it's lost in the stream and it's downstream too far, it's lost, and that opportunity is lost. And so firms are really working towards taking their CRM, taking the data collection, taking the touch points that the RIAs are engaging the asset manager with, and really saying how fast can we respond to their particular needs, because time is of the essence, and given this crazy environment we're in right now, it's only going to get worse. So responsiveness is critical, and I think it's easier said than done. I know a few boutique firms that are pretty good at, because they have only one or two solutions, they can turn things around pretty quick. I think for large institutions, it's harder. But there are solutions to get around it.
I lied. I want to do one more because it's so important. And we bang the drum so loud on this that I don't think that our listening audience can hear it enough, because one of your findings was understanding the RIA's practice. So I've read it. I just want you to talk about this, because we talk about doing your advisor intelligence. We talk about what you should know before you go into the meeting. We talk about understanding what'll touch their heart and what'll touch their head. And we talk about everything at Wholesaler Masterminds that you should be doing by way of creating intel that separates you from the sea of sameness. Maybe we're starting to become white noise on it. Let's hear it from another source. Go for it.
All right. Well, again, it really is important to really listen to what the advisor has. We actually advocate in the report this 2-for-1 approach, where for every one question an advisor asks, ask them 2 questions back. It's this real sense of obtaining this dialogue. And again, it's not having this very static approach towards data collection. To really understand the advisors means that you have to spend more time with those advisors, that you have to really track all the touch points you have with it. And it can be even very simple things. A lot of people think, well, aren't we doing that? I can't tell you. So in many cases, people think I'm an RIA because I'm signed up for different publications and different things I sign up for as I'm doing research. And I have firms calling me wanting to pitch me a new solution or new product they've come out, or there's a new marketing newsletter they want me to subscribe to. And, they're pitching to me as if I'm an RIA, and I'm thinking, you never bothered to look at my website.
Yes.
Understanding the RIA starts with your data collection, which I think many firms need to revisit, but it also starts with combing through their website, subscribing to their newsletters, and it means going through their ADV again. Just because you're scraping data that came from an ADV doesn't mean that everything that's in the ADV is in that file. And so when you look at the really good wholesalers, and there's a lot of great wholesalers out there, I might add, this is not an easy job by any means, they're really doing their homework. They walk into any meeting, even before they get in there, they've learned as much as they possibly can, from the ADV to the website, towards even talking to other colleagues that may do business with them, doing all the research, running screens to see where they would show up on Morningstar. They want to leave no stone unturned, because what's the biggest turnoff for the advisor is when someone asks them a question that's on their website or that's in their newsletter or that can easily be found through anything very simple, and they're saying, you didn't do your work, why should I bother giving you the time and effort? They really respect an advisor that understands who they are from the get-go. And of course, part of that is listening more than asking in those first few interviews.
Wholesalers, the name of the study is RIA Wholesaling Best Practices, a qualitative approach to effective distribution. We'll put a link in the show notes and on our website for how you can go about procuring that report if you or your management is interested in doing so. Dennis, thank you so much for being with us today.
My pleasure, Rob. Thank you very much as well, and thanks to everyone listening.
Wholesalers, come back next time for another episode of the new Wholesaler Masterminds radio show. You'll find all of our content at wholesalermasterminds.com, and the podcast can be found at iTunes, Stitcher, and Google Play.